Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. In today's video we are looking at this ETF. This is part of the ETFs that we've been looking at so far, the SP funds, and we've already looked at two of those ETFs. So if you haven't actually watched those videos yet, go and have a look at those videos. And it's those two videos here, so part one and part two. So we looked at part one, we looked at Halal, Wahid Halal and ETF, and we also looked at the SPUS, which is part of the SP funds, and then we looked at the iShares ETFs. So if you haven't seen those videos, first watch this and then watch this video afterwards, because it kind of gives you an idea of all three ETFs that are available. Now Halal and the SPUS are definitely available through, if you live in the UK, basically you can buy these ETFs on the interactive brokers. Okay, so you can buy them through interactive brokers if you live in the UK. If you live in the US, obviously they are definitely available. I'm not sure if they're even available in Canada, but I know interactive brokers are available in Canada, so you might actually start looking into that if you're interested in the Halal or SPUS ETFs. iShares, I'm sure they're available in the US, but they're also available in the UK as well through Trading 212 and so on. So yeah, so that's just to kind of give you the background, so what we've been doing. So today we're going to just look at real estate ETF. But before we do that, I just want you to understand a little bit about real estate, or basically REITs, real estate investment trust. There are a couple of things that I want to mention first. Real estate investment trust is a company that owns, operates, or finances income producing properties. And that means basically the companies buy properties or they build their own properties and then rent out. REITs generate steady income stream for investors, but offer little in the way of capital appreciation, and that's really important. They don't actually 10x in the next couple of whatever years. They do pay you some steady dividend, and I will talk about the dividends in a second. Most REITs are publicly traded, basically like stocks, which makes them highly liquid, unlike property. So it will be very difficult to sell a property. It takes very long time, whereas stocks, with a button of just one click, you can sell them. REITs are investment is basically a real estate property types, including apartment buildings, cell towers, data centers, hotels, medical facilities, offices, and basically retail centers and warehouses. So they do have basically they buy properties and they rent out offices to companies like data centers, hotels, and all sorts of things. They started in 1960s in America, but in the UK I think it was 2007 or early 2000s they've started. One of the things that companies, in order to become a REIT, basically some of the rules that you have to follow are this. Okay, so invest at least 75% of the total asset in real estate, cash, or US treasuries. Derive at least 75% of the gross income from rents, interest on mortgages that finance the real properties or real estate sales. Pay minimum of 90% of the taxable income in the form of shareholders' dividends each year, and this is important. So in terms of, instead of basically you buying your own property, what you end up doing is basically use REITs. So buy REIT and just get the money. You're not a landlord. You don't have to deal with all the stuff that comes with being a landlord. You just basically buy a REIT and then get the money that way. The only issue with this is they, in the US, okay, and I think it's in the UK as well, dividends from REITs are taxed as a normal income. So you know how you get income tax, you have to also pay taxes on your dividends, okay, just like a normal income. Also be an entity that's taxable as a corporation, be managed by a board of directors or trustees, for example, have at least 100 shareholders after its first year of existence, have no more than 50% of its shares held by 5 or fewer individuals. So in order to a company to become a REIT, they have to meet these rules, okay? So the couple of other things, the two types of, they're mainly three types, but mainly two types, but there's also another one here. So equity, and then you've got mortgage. So mortgage REITs is the ones that we cannot, as a Muslim, you cannot invest in because they deal normal mortgage. Okay, they deal a lot of the interest, obviously. So that's riba, involved in riba. You don't need to worry about that. The equity ones is the ones that we can invest in. So they basically owns and operates as income producing real assets, whereas this one holds mortgages on real properties. Okay, and then you've got hybrid, which basically is a bit of both. So that is basically what REITs are. So let's now have a look at this ETF. So, but actually, before we do look at the actual ETF, I want to show you some screenshots from Zoya. So some of the brothers have actually mentioned that made the request to actually see the, basically asked me to do this video, said on Zoya, basically they've mentioned that quite a lot of the companies in this ETF are actually non-compliant. And as you can see here, this is the ETF. It has a certificate, basically certified Sharia compliant tick. If you click this link here, it takes you to a page where they show you, basically talk about how many, basically someone actually verified, a scholar verified all the stocks in this ETF and said, yeah, they're absolutely Sharia compliant. It has their name and everything. I think I'll see if I can find it through this before the video finishes. But yeah, so that's why it's got the tick. And as you can see here, okay, this actually, they managing the asset under management is about 30 million, okay. The expense ratio is 0.7 or 0.69%. And then you've got about 3% dividends, which is quite nice if you think about it. But then you've got compliant wise, you've got about 50% of the stocks in this portfolio or ETF is actually compliant. And another 41% is actually non-compliant. So it's quite high for my likings. But remember, what they're doing is they add in all the, basically, all the, from business side of it, basically they're looking 5%. So they're going to look at the business itself and say, totally is 5%. Is the business model basically compliant in terms of, if it's less than 5% compliant side, then it's perfect. Whereas the debt, they also add the entire debt and they make sure that is less than 33% and then so on. So if you don't know what I'm talking about, just watch all the videos where I talked about that in a bit more detail. Now let's look at the non-compliant companies in this. So we've got Prologis, which is the one of the biggest, basically the Amazon warehouses. All the majority of Amazon warehouses around the world are owned by this company. Then you've got American Towers, Crowd Castle, Public Storage, Apartment Investment, and Universal Health Retail, REIT. So all of these companies, majority of them are non-compliant because of their debt levels, not because of their business model. And then you look at the compliant companies, okay, all of these companies are compliant and you can invest them directly or through this ETF. So you can see about this, so about 50% of this and majority, so almost 9% of equities. This company is actually data center. So they own a data warehouses where they rent out to other companies. And because of the growth of the rent, I actually wanted to buy this stock for a long time ago, but it's very, very expensive at the moment. They have a really good business model where they actually have their own warehouses, they've got their data centers, they set up the whole thing, and other companies actually just rent out and pay basically monthly or whatever yearly rent, for example. Duke Realty Income Corporation obviously is another one that I actually like, but it's quite expensive. Avalon Bay is another one that I actually like. They own community, they own basically apartments, blocks, and so on. So there's some really good companies in here, but as you can see, the compliant is 50%, non-compliant is 41%. So let's have a look at the actual REIT and then talk actual ETF and talk about it in a bit more detail. So in here it says SPRE seeks to provide exposure to a Sharia-compliant real estate investment trust, which is collective investment scheme in real estate that combines the best features of real estate and trust funds. Okay, they obviously diversify their affordability, high dividend distribution, which basically REITs are very well known for. Okay, let me just zoom in just in case you can't see that. And then you've got high income and you've got inflation hedge. So there are quite a few benefits of basically for owning this REIT. Starting in 2020, okay, there's about 32 companies in there. The expense ratio is 0.69%. Distribution is monthly, so you get dividend every single month. And then asset under management, in fact, this is slightly different. According to Zoya, it's actually way less than that. But then you've got the weighting, for example, the weighted average dividends is this, and the target dividends is actually should be about 3.68%, which is quite high. And then when you look at the companies, the top 10 companies, you've got Public Storage, you've got American Towers, Equinix, and then so on, so and so. Avalon is actually at the bottom there. So you can see from 12%, which is quite high for my liking. Again, another 12%, another 12%. So I don't like the fact that is highly concentrated on the top 3 business or 4 businesses actually in this, because if one of those goes down, you lost to 12% straight away. So yeah, that I don't like. But hey, it looks okay so far. And again, because it's started recently, we're gonna have to wait a couple of more years to find out basically how it performs, because at the moment there's not much of a data, to be honest with you. And then there's a couple of more things they've talked about here, diversification and all that stuff, so you can just read this. Again, you can find this on the actual website. Okay, so the company itself's website, SPRE funds, if you go to that website, you'll be able to find it. Right, so we found a little bit more information on the actual website. So if you look at the cumulative, for example, for 1 month, so this is the market price, this is the fund itself, and then this is the index that it tracks. And you can see it mirrors the index, to be honest with you. So that's not bad at all. Year 32% return for 1 year, which is really good. It's only been around basically since 2020, so it hasn't been around for 3 years. So yeah, it tracks the overall market, which is quite good. In here, you've got quite a bit of information, so you've got loads of different things, okay, that you can have a look at if you're interested. I'm not going to go through every single one of them, but you can look at you can actually see the entire holdings as well, and so on. Now, this is one of the company basically files that are in here. So it talks about key takeaways. It says provide shariah-compliant exposure to diversified global REITs by utilizing capping all the equity global REITs and excluding the REITs in non-shariah-compliant industries. Now, that means they don't look at the mortgage side of things. Okay, so that's basically what that really means. And then it provides access to REITs which debt to equity ratio below 30%. That's interesting, because some of the companies in there are definitely have a debt to equity ratio actually below 50. Debt to equity ratio, yeah, that's absolutely fine. Being lower, leveraged by yeah, so that's fine. Then you've got basically the things that they don't invest in, obviously, because they REITs, they're not going to be investing in basically alcohol or gambling or anything like that. So yeah, you've got a little bit more information in here just to kind of help you as well. Like I said, there's so many information in just this website that you can actually go through. Again, the annual report from last year is also in there. So like I said, there's quite a few documents in there. One of them actually kind of gives you a breakdown of the shares of every single company in that REIT and how many shares they have basically, and how much is worth at the moment, and so on. So you got quite a bit of information in there just to kind of go through yourself. But generally, I'm struggling to find a reason why you shouldn't invest in this, because when you think about it, right, it's a REIT. They do quite a good dividend. The only concern I have from my perspective, from halalness side of things, is the fact that the individual companies, okay, when you look at it individually, there's about 50%, like almost 50% of the companies in there are non-Sharia compliant from debt side of things. That's a little bit worrying. I don't like that. Because if these companies start cutting their dividends, obviously remember they're supposed to pay 90% of their income as a dividend. And because of COVID, because of a lot of things that has happened, some of these companies have not made enough money because for example, malls were closed and companies actually moved out of the offices and so on. So I don't know where REITs are heading, but from income perspective, it sounds good. From long-term investment side of things, I don't think it's a good investment for me. Okay, generally that's my opinion, because if you think about it, right, you want income. If you just after income and you just want that solid income that comes in, like as a dividend investor, I love that. But I also would like to have a little bit of control of what I'm doing, number one, and number two, I want to know if some of the businesses here will actually be around for long enough, or are they just gonna basically get bankrupt or whatever because of offices closing and so on. So I'm really struggling to just say the reasons why I should invest in this, but I don't really as you can see, I'm struggling a little bit because I don't see why someone who's after income shouldn't invest in this. But also, if you're investing for the long term and you want capital appreciation as well as the dividend, as well as obviously owning a solid business, then it's fine. My concern is some of the companies in this ETF, right, might not be the type of business I would have invested, like if I was buying individual, right, stocks. So I like Equinix, for example, and I like Avalon, and both of them I would have added to my portfolio. But the issue is, especially Equinix, because I think the data centers have a place, and from technology side of it, I know we are heading that direction. Basically, there's more demand for this, but there's less demand for the other things, for example, malls and so on. Amazon is taking over. Okay, so that's my concern from basically from investment perspective. But I've found now is the file that I was talking about earlier. Okay, so when you open Zoya, it takes you to this page where it's called the certificate of Sharia accreditation, and the person who signed basically this is Abdul Bari Marshall, and a PhD. But I think he's one of the people that is in the website that I've shared with you guys last time when we talked about the other ETFs, and it does say it's a Sharia compliant. So I don't see why basically someone who's interested in the income side of it would, should invest in this. I can't see any reasons why you should invest, but for me it's a pass, I'll be honest with you, because like I said, I'm struggling to give it a good reason why, because I really want a solid business that will be around for a long time. I understand the future of it and so on, but owning that ETF, I just can't. And the fact that it's one industry as well, okay, that's the major thing for me. That's one industry. If something happens to the REITs generally, then basically you're going to tank, and yes, you will get the income, but what if they start cutting that? Or what if the companies go bankrupt? And there's too many questions, too many what ifs. As you can see, I'm struggling to give a good reason why you should own it. But yeah, for me, it's a pass. If you already own it, then good luck to you. I hope you make some good money. But for me right now, I don't think it is a buy for me. If you own the other ETFs and you just want to diversify a little bit, okay, and you don't mind the fact that it's basically highly concentrated on one industry, then and you are after that income and growth, what basically income side of it, and you're not worried about growth, but then I think it might be a good fit for your portfolio. But for me, like I've said so many times right now, it's a pass. It's definitely not something I'm going to add to my portfolio anytime soon. I rather buy the individual stocks that I like and pick those stocks and then fly with them, instead of just basically owning the whole ETF generally. And it's quite expensive. Okay, that's very expensive. Like in comparison to the other ETFs out there, it is quite expensive. So yeah, it's a pass. I hope you understand my reason. But like I said, overall, some of the companies in there, yeah, they're solid business. Overall, a little bit uncomfortable about Sharia compliance side of things, but at the same time, is highly concentrated on one sector. So it's definitely a pass for me. I hope you enjoyed the video. If you did, just give it a like. Thank you very much. Assalamu Alaikum.